Teun, what's your view on equity markets?
We've come a long way. So 09, 08, 09, big crisis, and equities have more than doubled since then. And often when things look very bad, it's a good time to buy equities. And when things look a lot better, it's a less good time to buy equities. Now, funny enough, there's quite a lot of optimism out there about growth. And for good reasons, I do think the growth outlook is pretty good. But we have to recognize that valuations are now quite a bit higher than where they were. On a multi-year view, equities are the best place to be. Bonds are expensive, other asset classes are expensive, so on a multi-year view, you still want to be in equities. But they are priced for below average returns, the way I look at it. So the entry point is slightly above average, so you should expect below average returns for the next few years, especially in the US. But this is the irony. The place where things look best, the US, is also the place where future returns will disappoint most, in my view. So we see loads of opportunities. We like, in particular, European equities, which are close to record cheapness compared to the US. We like Japan, extraordinary things going on in Japan, and we think there's loads of opportunities there. So we think there's good positive returns to be made for an equity investor. But it won't be as easy in hindsight as the last few years.
And how do you see the bond market?
Well, bonds, people love to hate bonds. And indeed, rates have been going up, so you've been losing money holding bonds the last few years. I think the surprise will be that rates will stay low for a very long time. I do prefer equities over bonds. If you expect positive growth, equities are the most liquid way to participate in growth. And of course, bonds, you don't participate in economic growth. So, obviously, in the longer term, unless the entry point is too high, unless valuations are too expensive, equities will do better than bonds. And that's our recommendation. It's something we do in most of our funds. But again, the surprise may be that bond yields will stay low for much longer. I've looked at a lot of historical evidence, and I find that if you're in this kind of period, when there's too much debt, be it private sector debt or public sector debt, when there's too much debt, you may stay in this kind of period for, say, 20 years. And rates will stay low for 20 years. And that sounds like a crazy forecast. I'll reassess it every single day. But I think we're in that kind of world where growth will stay low and fragile, with some good moments and some bad moments, and rates will stay low for a very long time. So I don't hate bonds as much as the newspapers or the consensus will make you believe you should, but I prefer equities over bonds, yes.
Thank you.